aqui na favela. Pra sentar no meu.
What's going on, guys? Welcome to Own the Chaos. My name is Brad Smith, and I am going to go over dilution with you guys today. So for those of you who normally follow my channel, I almost always go live and interact with you guys and answer any questions you have that pertains to the OTC or stocks or trading or anything like that. But I'm trying to start to, manage my time a little bit better and still provide you quality content. So I'm going to do this on the weekends and give you some pre-recorded stuff. And hopefully you learn a little bit from this and, join us when I go live throughout the week. So the topic for discussion today is dilution. Now, what is dilution? How does it affect you as an investor or trader? And should you be worried about it? And the answer to that is it depends. So when a company is low on funds and they're still trying to stay above water, they're still trying to pay all their employees, the CEO is still trying to get paid, they might reach out to a lender. And a lender may not be the greatest guy in the world or have the best ethics in the world, especially when it comes to over-the-counter stocks or people who are trying to start up a company. They don't always have the best intentions, and I'm not saying that all of them are like this. So don't, see dilution occurring and then everything, and then, you just don't even pay attention to that stock because it's being diluted, because you can still make money on a diluted stock. But just for all intents and purposes, say that I'm a CEO of company A, and company A is in a little bit of a trouble because we don't have any money. We're not gaining any cash flows as we're still trying to build. Maybe we haven't turned a whole bunch of profit yet because we're still trying to get our feet on the ground to generate revenue. And so what I would do is I would try to see if I could go get a loan. And that's what a lot of these companies do. They go to this, we'll call him Loan Shark B, and he says, yeah, I'll give you $500,000 if I can have 500,000 shares of your stock. And so that sounds pretty decent. Here's 500,000 shares of my stock. Thanks for the cash. Now I can pay my employees and myself. We all still can eat. But how does that affect you? Well, it doesn't affect you yet. It doesn't affect you until that loan shark, we'll call him Loan Shark, sells and dumps all those shares onto you, the investor. So what that does is it shrinks your piece of the pie as far as ownership in the company. So they're dumping shares into the company, and you are now, the value of your stock has now diminished. Think of it this way. I love Kool-Aid. When I was a kid, I used to always drink Kool-Aid. Or even if you're an adult and say you have, some Jack on the rocks, or you like a little bit of whiskey and you just throw a little bit of ice in it, and you're sitting there sipping, and all that ice is melted, and that whiskey kind of tastes a little funny. Because it's been diluted with that water that has now melted into that whiskey. Or, if you have some Kool-Aid and same thing, the ice melts in your Kool-Aid and it just doesn't taste all that great anymore because the sugar has been diluted in that Kool-Aid, or your liquor's been diluted in that Kool-Aid. So it's the same principle, the same concept. It doesn't really leave a good taste in your mouth. So what does that do for the investor? The investor's like, maybe I'll get out of this because I don't want to experience the value of my stock going down. So I'm going to go ahead and sell. Now, this isn't to say that you can't play on a stock that is being diluted, because there's plenty of them out there. If the demand is strong enough and there's enough people in there buying, you can push that dilution or that dilutive market maker, and we'll get into those market makers in a second, but you can push that dilutive market maker up, and they'll probably stop selling those shares because they want to sell it at a certain price and not as it's running. And so that is how you could potentially still make money on a stock that might come out with a major catalyst. Even though it's being diluted, it could still run because demand for it will become high. That's basic economics, right? If you have $1 and there's only $100 out in the United States, but then the United States says, hey, we need more dollars, let's throw $100 more out there. That $1 isn't worth as much because it's not as much in demand. So simple supply and demand. And so that's how all of that works. Now, there are dilutive market makers out there that you might want to pay attention to when you're looking at level 2 stuff. when it comes to, you know, live trading. You can see there is, and I'll put it up here somewhere. VNDM is a typical market maker that dilutes stocks typically. BMIC is another one. That's BMIC is another dilutive market maker, and VERT is known to dilute as well. And I'm sure there's other ones out there. Those are just the most common ones in the OTC that you can look at and say, okay, I'm looking at this stock, it's starting to run, I see that it's diluting, and so you could still make money on that. Typically though, you're only going to be able to make money on that short term, because eventually that dilutive market maker is going to come back and continue dumping shares at some point. It's usually when the buying volume starts to drop is when he starts to sell, or he starts to dump more shares in there, because he's trying to get, you know, that lender is trying to get rid of all that stock. And so you could always keep track of this as well. If you're looking in your OTCmarkets.com, I'll pull it up for you. Okay, so here is a example of how dilution works, and how you can actually see how dilution or how shares have been added to a stock. So if you're going through and you're doing your due diligence and you want to invest in a company and you want to know, hey, is this stock being diluted? Do they have a bunch of debt that they're trying to pay off? And so you would find that through their 10Q or 10K filings. Those are financial filings that they post each quarter or annually, depending on which form it is, and so that you can kind of estimate when or how a stock is being diluted. So most current, I would say all current reporting stocks have what's called a transfer agent, which updates their share structure periodically. And so this one has recently been updated on April the 30th. And if you go and look at one of their past filings, you can see as of October 1st, 2017, their outstanding shares was 157 million, and now it's 292 million. So that is an indicator that this could have possibly been diluted. But the nice thing is that the actual float is only 75 million. So this could, you know, still obviously is being diluted, and it would diminish the amount of diminish the value that your amount of shares have. But the float is really kind of what matters here. The float's going to be what's actually being traded in the market. And so, you know, this directly impacts how the stock would move should a sudden surge of volume come in, whether it's buying or selling. But that is how you, you know, determine, you know, on paper, how a stock has been diluted. All right, so I hope that helps you understand dilution, how it works, and how you can actually physically see it in a live example like I did with that ticker in OTC markets. You know, it's really simple understanding of how dilution works and how it can affect a stock. With that, guys, don't forget to click on that subscribe button if you learned something today, as well as like this video as well. I would surely appreciate it. Check out all the links down below in the description. I got some fun stuff down there. You can check out our Discord chat group, as well as our Facebook group, where we all network as like-minded individuals to help each other learn and succeed in this wild and crazy game that we call the OTC. That's all I got for you guys. As always, I will see you all before the bell, and B Smith is out.